Welcome to another episode of the Einstein Retirement Daily, where we curate financial, economic, and market news for the headlines that affect today's retiree. Today we'll talk about how gasoline prices, oil prices more specifically, are hitting 7-year highs. As always, should you hear something in today's podcast that causes you to want to take some action or do something, please bear in mind that this podcast should not be construed as specific tax, legal, or investment advice. Should you hear something today that causes you to want to do something or make some changes in your specific situation, please confer with the appropriate tax, legal, or investment professional prior to making any changes. Okay, Camila Domanowski, wow, I should have practiced that, from NPR. She produced an article for us entitled, "Oil Prices Are in Turmoil Right Now. Here are 5 things you need to know." So oil prices has always been just a little bit of a question mark personally for me in my mind, trying to understand what drives the price of a barrel of oil has always been a little complicated and not very transparent. Maybe that's a better way to say it, not transparent. And I think I've sort of deciphered some of the reasons why it's not very transparent. But let's talk for a minute about what's going on. If you haven't noticed, I think many of you are seeing your personal price to fill up your gas tank in your vehicle going up. And so why is that happening? What's going on? Well, let's cover a few things from this article. Camila said 5 things you need to know. I don't know that she quite peeled those out very obviously, but I'm going to try and pull out the 5 takeaways that I got from the article. Demand for oil is increasing off of the pandemic. When the pandemic hit, we saw demand for oil drop pretty drastically. And so whenever you have a demand decrease, but you still have supply, it's going to cause a price drop, because if there isn't demand, they still want to sell their supply. It's like having too much cans of green beans on the shelf. You put them on sale to get them sold. Same thing with oil. You're going to sell and put it on sale essentially. So you want to get rid of your oil supply because you want to keep selling oil, so or gasoline. So the price of oil was in a decline, a very significant decline. In fact, it was really putting a lot of pressure on these oil companies, and we'll talk more about that in a second. Okay, the second thing that Camilla highlights is that oil producers are pumping less oil. However, that is not true in the United States. So I'll link a Y-charts chart, price list, and what you'll see is that production, there was a little dip last year, but not much. In fact, crude oil production in the U.S. is really as high as it's ever been right now. And so we're seeing that plenty of oil is being produced in the United States. So what does Camilla mean when she says oil producers are pumping less oil? So that takes us to number 3, and that's OPEC. OPEC stands for the Organization of the Petroleum Exporting Countries. It's 13 countries. Think Saudi Arabia, the United Arab Emirates, places like this. Venezuela, I believe, is a part of it, one of the founding members. So the OPEC is having problems. It's OPEC that is reducing production, and they are not really reducing production. This is a carryover, but more on that in just a second. The point is that OPEC is having problems. They met recently, and the meeting did not go well. The United Arab Emirates specifically was highlighted in this article from NPR, saying that they would like to drill more. Saudi Arabia doesn't want the UAE to drill more. In fact, I guess they like the price where it's at. They want to continue to restrict supply so the price goes up further. That's what Saudi Arabia wants. The UAE is not of similar mind. So they're competing, they're combating. Now this is sort of a club in a sense. It's not something they're required to be a part of, the OPEC. And so another thing that is highlighted in the article, number 4, is that OPEC may be on its last leg, meaning there have been lots of disagreements amongst OPEC member states, and these disagreements could lead to a dissolution of OPEC. If something like that were to occur, you could pretty well say all restrictions are sort of off the table. These countries can basically do whatever they want. They're not working together in any sort of way to control the price of oil. Most likely, a few key states will produce lots of oil, and producing lots of oil is likely to drive the price down. Again, increased supply is going to reduce the price. So the UAE is happy to drill lots and lots of oil, sell lots and lots of oil for a very low price. They feel that's good for them. Saudi Arabia is saying, hey, wait a second, we don't like that. So these disagreements could cause OPEC to dissolve. And so in that case, likely what Camilla puts forward is that, from NPR, is that the price would plummet in a situation like that. Why is that such a big problem? So number 5, so the 5 things you need to know, the 5th thing you need to know is that oil price volatility can really spell a lot of problems for oil companies. Just think about oil futures contracts. When you buy a futures contract on oil, you're buying oil in the future at a price that's guaranteed to you today. So typically, if the trend is up, you buy a futures contract, you're saying, I'll buy it for a higher price in the future. If the trend is down, typically your futures contract will be to buy it in the future at, again, a lower price unless we expect it to turn around and come back up. So there's a lot of manipulation, and futures contracts on oil are going to be in a tough spot. Companies can literally go bankrupt. Many oil companies literally bankrupt if they make a bet or a business decision based on an expected oil price that doesn't work out. They expect the price to be very high, so they do lots of investing to build up their infrastructure to support a higher price. Then the supply goes through the roof, the price goes through the floor. They can't pay for the infrastructure they just built up. The reverse could be true. They plan on the price being very low, and it ends up going very high, and so now they don't have enough production to capture those price increases, and so they literally can't sell they sell out of their oil, and they run out of cash flow very quickly. And so these are the problems with price volatility in oil. Apparently, former President Trump in 2020, in the middle of the pandemic, struck a deal with OPEC that caused them to cut production across the board and prevented oil prices from collapsing. NPR calls this unprecedented. I call it, sounds pretty good, I guess, because it worked pretty well, but now President Biden is not taking any sort of strong input with OPEC. He's not getting involved. He's not really doing anything, and so OPEC is doing what it will, and we may see OPEC fall apart because of that. CBS News highlights that in Los Angeles, prices at the pump were a penny shy of a 9-year high of $4.33 a gallon. So what should we expect? Should we expect that to maintain? Are we going to go up to $5 a gallon? Are we going to go up to $6 a gallon? Possibly, but many of the experts cited in these articles are saying don't count on that. There's a strong belief that OPEC will work out its disagreements, increase supply somewhat, thus stabilizing the price or even decreasing it again a little bit. Or another possibility is that prices will drop drastically because OPEC falls apart and countries do whatever they want, and they can produce as much oil as they can handle. And there's certain countries that can produce a lot of oil very quickly, apparently the UAE being one of them. Okay, that's all we have for today. Hope the travel arrangements and things that you're doing are not being too negatively impacted for your retirement plans by the price of oil, but sorry if that's the case, and do wish you an enjoyable retirement travel time period, especially coming off of this here pandemic time. With that, we will wrap up for today. I look forward to engaging with you at our next daily podcast. If you would like to subscribe to our YouTube channel, follow our Facebook page, engage with us and let us know that you'd like to attend one of our 1-hour workshops on Social Security or taxes. We'd be happy to do that with you. And with that, we'll wrap up for today.